I'm joined today by Michael Glimcher, Chairman and CEO of Glimcher Realty Trust. Michael, let's talk a little bit about the retail sector. It's taken its share of lumps. How would you describe the overall health of the sector now?
I'd say things have certainly stabilized at this point, and we would be cautiously optimistic. While the environment is difficult, and let's face it, 70% of GDP is made up of the consumer, and the consumer's had a difficult time lately, I look at our operating fundamentals. We ended the quarter at almost 92% occupied. Our releasing spreads were 7% positive versus about 1 or 2% earlier in the year. Traffic is only down about 1% versus 2% earlier in the year.
Looking ahead to 2010, things going to continue to get better?
I would say cautiously optimistic for us. Again, we've stabilized with occupancy. NOI's off, but on the margin, and so we're optimistic that things are just stable through next year, and hopefully we'll move upward from that point.
And Glimcher has a reputation for an aggressive development pipeline. Did you have to make adjustments there given the economic difficulties?
In this environment, I don't see a lot of development activity, and as I look out over the next 3 to 5 years, I see us looking at acquisition and probably not very much development at all. Perhaps a little redevelopment within the existing portfolio, and maybe redevelopment if we find the right acquisition opportunity, but I don't see us or anyone doing very much from the ground up.
Really? That long of a timeline, 3 to 5 years? Is it just that there's so much supply out there? Or?
I think there's a lot of product, and I think it has more to do with financing, quite frankly. I think it's going to be quite some time before lenders are going to want to get out in the market and really support ground-up new development.
We've heard a lot in 2009 about all the steps companies have taken to shore up their balance sheets. I'm sure Glimcher's no different. What have you done?
We've done a couple significant things recently. We actually completed a $115 million equity raise, and it was exciting because we shored up the balance sheet. We also brought back some institutional investors who had left the name and decided to come back in, and frankly, a lot of investors are coming back, not just in our name, but into the REIT space, which is really great. We also just completed a joint venture on 2 of our mall assets with the Blackstone Group, which we're awfully excited about. So between the 2 of them, we've brought about $170 million of new capital into the business.
Let's talk about the institutions first. I'm just curious, have they given you an explanation about what it is that's drawing them back in?
Well, it seems that a lot of the major REIT shareholders realize that we've hit a bottom point, and also a lot of companies like ours are recapitalizing and significantly repairing their balance sheet. So here's a chance to come in at a low and play in a meaningful way in the betterment of the company. What a great opportunity! What a unique point for people to come into these stocks.
And you mentioned the joint venture with Blackstone. Are those the types of deals that you see more of happening?
Well, I think a joint venture is certainly a way for us to grow. It brings additional capital to the table. It lets us leverage our platform. And in a capital-constrained environment, having a great institutional capital partner and strategic partner is certainly a way that we see growing.
And I understand Glimcher has made some asset sales of some non-core properties. Is that a strategy you expect to continue?
Our portfolio is always going to be fluid. We're always going to be adding. We're always going to be deleting. So prior to the market really turning, we sold about 5 mall assets, and it certainly bettered the average asset within the portfolio, and the timing was tremendous. There are several of them probably assets that you couldn't sell today. So I think that timing was good. But we're always going to look at the portfolio as being fluid.
For REIT.com, I'm Matt Bishar.